Partnerships between fintech companies and banks are pretty common nowadays, as they create substantial benefits for both sides. However, the devil lies in the details, and not all partnerships make sense. And with the rise of embedded finance, more and more non-financial brands seek partnership with banks. That's the topic for today when I speak with Richard Würl from Redstone. Redstone is a Berlin-based venture capital company with multiple funds, one of which is focused on fintech and B2B SaaS. In the episode, we speak about the different types of partnerships, including those that are often overlooked. Richard shares learnings from his portfolio companies, and we discuss how fintech startups and non-financial brands can navigate the complex world of partnering with a bank. My name is Lars Markull, and this is the Embedded Finance Review podcast. Every 2 weeks, I'm interviewing the builders and shapers of embedded finance. And a quick reminder from my side, at Embedded Finance Review, I publish weekly newsletters, bi-weekly podcasts, and host in-person and virtual industry events. You can find all of these on our website, embeddedfinancereview.com. In addition, I also work with non-financial brands, infrastructure providers, and banks in understanding, designing, and launching their embedded finance products. If you're interested in working with me, visit the Embedded Finance Review website and reach out. And now, let's dive in. Hi, Richard. Welcome to the podcast. How are you doing today, and in what part of the world are you actually located right now?
Hey, Lars. Good to see you. Thanks for having me. I'm currently based in Berlin, which usually in summertime is the most beautiful place on earth, to quote Goodbye Lenin. Unfortunately, this year around, it's quite rainy and it rather looks like autumn. But I'm excited to talk about one of the most exciting topics in the fintech world.
Yeah, you're very right. I'm obviously, of course, also based here in Berlin. And maybe that means that the summer is a little bit less travel for some people and maybe a bit more activity and work. Maybe that would be a change. And Richard, we connected a couple of weeks ago at the Tech Quartier event in Frankfurt when we had the Embedded Finance Day for the Digital Finance Accelerator. And that's when we started talking. And obviously, we also had a couple of chats after that. Or one of your that you spent a bit of time on, that's the partnership between fintechs and banks. Can you explain a little bit more, like what's your focus on the topic banks and fintech partnership? Why do you spend so much time on it? You also written an article about it we'll talk about later, but quite interesting to hear why this topic specifically.
Yeah, happy to answer that question. Some background on Redstone. So we are a European early stage venture capital firm and have a somewhat unique DNA that we operate, or we have several sector-based funds. And one of them is our fintech and B2B software fund, which we kicked off around 10 years ago. And this is entirely backed by banks and insurances. And one thing we are very proud of is that we try to bridge our portfolio companies with our LPs and the wider financial institutions insurance network to help them enter into client relationships, partnerships, and help them to benefit by each other mutually. So that's also the reason why we wrote this article, because we are very passionate about this. B, we see tremendous value in those partnerships. And C, we often feel that there are pitfalls or maybe different motivations, expectations. If you would have known before, then it would have been easier to handle those.
Makes sense. And does it mean then specifically, let's say, for your investment thesis and focus, is that already where you'd like take the partnership angle in consideration as well? Are you potentially more likely to invest into a startup if there is a potential angle for a financial institution insurer, or is that rather secondary at that stage?
We try to do our investment decisions independently, but it happens that we focus on areas where we feel have a certain expertise and also get to reference calls, judgments by experts in a quicker way. And so it happens from time to time that we also like to focus on those areas, but don't exclusively focus on those.
That makes sense. And obviously, my podcast is typically really focused on embedded finance, non-financial brands doing and launching financial services. Obviously, your focus was pretty much on like fintech startups with banks. From when we spoke, obviously, we found it like quite interesting also for the embedded finance world, because we're seeing the past quite a lot of like fintech startups partner with banks. But obviously, now with the continued rise of embedded finance, we will potentially also see more of the non-financial brands partnering with financial institutions, with insurance companies. So I guess the learning what we're going to speak about now, maybe more from a fintech perspective, has also quite some relevance for the non-financial players. But maybe to kick things first off, and you mentioned already you are On the one hand, you're investing into fintech startups that potentially want to partner with banks and insurance companies, or your funds are coming from those sides as well. Then maybe like from your perspective, what is driving banks and insurance companies into these partnerships with startups? I mean, maybe, I don't know, like 10 years ago, has also something changed in this partnership approach at banks?
We feel that there are two different buckets that influence those partnerships. The well-known external factors that the tech team is quite aware about. So you have those technological innovations on an artificial intelligence side, but also stablecoin applications and the entire embedded finance field. And then also the clients and regulatory pressure that drives banks and insurances to adopt certain workflows. And this is always a gap for an external party, a service provider, a digital provider to step in. But then the bit lesser known, but I think equally exciting part are those internal factors. And here you can differentiate between banks and insurances. Banks, it evolves the theme that running a local bank branch is quite expensive and challenging. So you need to find enough people to run a local branch with talent shortages pretty much in the entire Western world. But here in Germany, we feel it especially that's quite hard to do in a first step. Then B, you want to offer your entire service portfolio and everything that makes you special as a bank to your customers, to your retail customers, but also to your SMB, your enterprise customers. And that's difficult to do in practice. So this leaves a potential for digitization and digital providers. For insurances, it's slightly different. They share the talent short, the digital and technological potential and the compliance regulatory pressure. But for them, they also sit on so much data about how to handle claims, how to improve the entire insurance process, that this is a unique potential for startups to tap in. And then the broker intermediary model is also something that is on one hand endangered by digital competitors, but also has a lot of potential to improve. So these are, I would say, the factors that influence partnerships and make banks and insurers think how to step into the future. Also, I would say sometimes when we speak with founders, we feel for them it's crystal clear they are a digital solution. Banks and insurances are not digital at all, so they are craving for it. That's true. However, the wording and how when you speak with operators at banks and insurances is that they are more pain point focused. It's not so much living in the realization of an under-digitized process, but more, okay, I see my struggles, my day-to-day struggles, and if you can tap into those and show me some real-world use cases that make my life better today, then I'm likely to try that out and also very open to that.
And I guess when we think like from an outsider perspective about this, the issue that you described right now, I guess it makes a lot of sense, right? Like a founder is very passionate and fully aware of the benefits of his or her approach, but obviously the employee, the leader in this big, large corporate who knows very well there are a lot of limitation of what can be achieved in a certain time frame is really laser focused. Okay, this may sound great what you're doing, but it's not really solving anything which I need to focus on the next 12 months. From your perspective, and like when you also talk to founders, you also have quite a few founders who specifically want to target banks or financial institutions, or maybe they want to learn how to partner with them. Is there then, I mean, it sounds like this is like one of the advice you would give, right? Like try to understand the problems of the financial institution, or maybe even specifically that person that you're talking to and addressing that problem specifically, and don't make it maybe the typical VC pitch and talk 10, 15 minutes about your general approach, but rather focus on what you can solve. Is that correct? Or what would be your advice?
Yeah, that's definitely correct. We feel that this is quite an overlooked potential for many B2B software firms. For fintechs, it's often more clear that selling to banks and insurances has so much potential and is quite valuable. For B2B software firms, what they often oversee is that they are a doorkeeper to most of the German and European SMEs and enterprises, because all of them have a bank relationship and all of them trust their banks or work with insurance brokers or insurance firms directly. And if those banks include parts of your offering into their offering and advise their clients to use that, then it's a crazy attractive distribution channel.
Do you see them currently? I mean, like I'm especially interested like in the partnerships, fintech, bank partnership. I mean, at least more than 10 years, right? Probably 2010-ish around. Probably we saw with like the fintech wave starting soon after. Maybe at the very beginning, the fintech companies were more like we replace banks, but I think then a couple of years later already was a bit of the realization maybe there's also a benefit with partnering the banks. More recently, now also with the rise of embedded finance, do you see, like you mentioned B2B SaaS companies, do you see them getting more interested in partnering with financial institutions, with banks? And when you see that, are these teams set up to talk to them? I mean, what you said before, it sounded like, a fintech founder who is building a fintech startup probably is while there might be still a lot of cultural gaps between the fintech founder and the bank person, it might be a lesser of a gap than potentially the founder of a B2B SaaS company who maybe has like very little understanding for financial services in general. What do you see like most recently the development?
So first of all, I share your perspective that 10 years ago, 15 years ago, it was rather a direct competition, and you saw those challenger banks and new insurers came out and said, we're going to replace that now. You don't need any bank anymore. And now it feels everything toned down a little. We're replacing it anymore, but we have a healthy coexistence. That the pie is large enough for traditional providers and digital providers to live side by side and also work together. So we were invested in Penta, and that, for example, one that represents that development quite well.
Makes sense. And then we mentioned already the article you've written about the fintech bank partnership, and specifically in this article, you're talking about like 5 different ways of cooperating. Maybe this podcast is a bit too much to talk about each of them in detail, but maybe you can highlight 1 or 2 that you think are the most relevant for us and the audience to understand a little bit better, and how do they differ. And maybe we can also underline them with some specific examples. Maybe both of us can find examples that represent this.
Yeah. To give a short insight into some corporations model, I think the one that is clear to most is if you can sell to banks and insurances and they're using your service. So they're potential customers. The most exciting one that I see is once banks and insurances integrate your offering into theirs and distribute it. Somebody who has that done quite well is our portfolio company, Atlas Metrics. They're an ESG reporting solution. Over 200 banks are using the service for themselves right now, but also they started to integrate their reporting offering to SMBs and enterprise customers to gather data and then also build different own products themselves out of this data pool that they have acquired through them. Another interesting model.
Just one question, just to fully understand it. So that means like Atlas Metrics first reached out to banks and wanted to sell their services to banks, and this was basically ESG reporting, so banks could do their own reporting in a better, more efficient, or more accurate way. And then banks started to use this software, and at one point, I'm not sure, Atlas Metrics and or the banks realized like, hey, this is obviously also something available for our customers. And then they started to, in a way, like the banks, maybe could clarify a little bit more, they started banks like to resell then the services of Atlas Metrics, or was it part of the product offering from banks directly, where somehow embedded? How does that look like?
To give an insight into their journey. So even when they were still at pilot MVP, they approached retail banks, mid-sized, smaller ones, and asked them if they were interested in trying out their solution around the back then upcoming sustainability reporting directives that were quite high up on the prioritization lists of financial institutions. And then even with an MVP product sold to banks and insurances back then. And then over time, as you described, they realized that it's not only important for them, but also for their entire SMB clients, and they can use it to gather data for themselves and also to recommend the solution to themselves.
That's probably for all of us and also for the team, like very simple to understand, right? I'm signed to the bank and the bank is selling them different services to so many SMBs. This is like super interesting. I guess the bigger realization is like, oh, this bank is actually willing to help me to provide my services to all their SMB customers, right? I mean, I guess, especially for a company like Atlas Metrics, especially going after the SMBs. I mean, when you sell to bigger banks, this is like really big, really interesting clients, but then going for the long tail is not so easy anymore. But obviously, when the switch clicks, it like it flips in a way like, oh, they're actually liking my product so much, they would also willing to help me to take this product to the customer. I think that's the really interesting part. That's a journey and not something you can probably from day one when you sell to the bank.
Another company who did this quite well is RemindMe. They're an energy switching solution, and they were also integrated into the online portals and online banking systems of banks so that they can provide this service to their customers.
Yeah.
It's always a mixture, especially for banks.
Yeah.
Potential here to show our customers that we can provide something others can't, and there's no need to switch to local competition or, God forbid, a digital competitor.
Understood.
Yeah. And then another, since we were speaking about cooperation models, another one for the more fintech related areas is there a way how we can integrate a banking, a financial product into our offering and be a distribution channel for banks and insurances? So Banxware is a pretty well-known example that they're working with the UniCredit Group, HVB, to use their products as an embedded lending solution and simply address way more customers that the UniCredit Group wouldn't do themselves. So for them, it was an enlargement of addressable clients that they wouldn't have otherwise. So that's also quite a beneficial solution and cooperation.
And specifically on that one, right? This is obviously with banks, we're an embedded lending company. I think for many of the listeners, they have seen in the last couple of months with the funding and the strategic partnership around that. I'm not sure if you can don't know strategy insights on UniCredit's side, but I think or for some people who read the news initially, the bank is now actually partnering with an embedded lending company to offer lending products. I mean, from a high level thinking, you would have thought, okay, embedded lending provider was built and started to enable non-financial brands, vertical SaaS, B2B SaaS companies to offer lending products. But a bank should know how to give out a loan, right? Like, why would a bank now part with a lending company? What we're generally seeing now in the partnership model as well is that banks now starting to partner more and more about the things which gets closer to the core, right? Where partnership initially were a little bit, I don't care about this, so I partner with somebody. Now it's really about the core products. What's your view on such partnership and the motivation of banks to doing this?
Yeah, it comes back to the theme that it becomes now costly to offer all your services and everything that makes you unique as a financial institution to your customer. And the smaller your clients get on the retail side as consumers, but also on an SMB side, the harder it becomes to serve them well and that the unit economics also work out for them. So Banxware is then a solution that even though it's so close to their core offering, but it still provides so much value for them that they can financially participate in the service while having better unit economics. So, and that's then their motivation why they push forward this partnership and invest in that so heavily.
And I guess, like, I mean, again, I also don't know any like details on the banks were like, oh, this is this loan application, this loan is could be interesting, but unfortunately, the cost to underwrite it and check it and stuff would actually exceed the money we could make, especially in the low interest times. So rather not do it at all, because even though it could be profitable as such, the cost to understand it and underwrite is too heavy. And I guess this maybe not exactly one for one, but also transfers to what you said right now.
Yeah.
Okay, so This was, I think, the second partnership model. Is there any more partnership models that you think are relevant to highlight, or are these like the two most important ones?
Yeah, at one point, when companies become large enough, then being a customers themselves of insurances and banks is also something that is very favored and liked by banks and insurances. So usually there are teams in every financial institution and insurance that tries to build up a relationship with those companies. And for example, we have a French insurtech company called Orus, and they use reinsurer to offer their products to European SMBs. So that's an interesting one where it makes sense to have a good market overview for any startup, and which is especially liked by banks and insurances.
Yeah, yes, you said like it's an interesting one, but probably rather a little bit that later down the line. And then when we look at that, and this may be a good point to talk about that, like this size, like is there, from your perspective, from what you've seen, when is the right time to talk to a bank, right? I mean, this might be, if you're looking at the non-financial brand side, then it might be a little bit easier because typically these companies have to get to a certain size to even think about financial services. So they're not anymore the couple of founders sitting in the garage kind of setup. But obviously for a fintech startup, specifically maybe a startup that either started as B2B or a partnership model, or maybe pivoted very early because they realized that direct to consumer, direct to business is not really working out. From your perspective, when does it make sense to seek partnership with the banks? Is there a specific point in time when it makes sense and before not?
Earlier than most think. So I usually advise companies to consider a few factors. The first one is, when does my value proposition work out? Does it already work out in an MVP setting and can provide value to financial institutions and insurances? If that is the case, then it's already a good idea to approach them while you're in an MVP setting. Then, of course, there are other factors like from a compliance perspective, does it work out? Do I need to be integrated in their core banking system? In an early phase, it's usually a good idea if your product works standalone and they can use it somehow. And the compliant, it's rather hard to be integrated into those systems and a higher burden on your own internal compliance settings. But if the value prop works out, if it works standalone, if you comply to, then even at a pre-seed seed phase, this can be quite beneficial and should be a good timing to approach them.
And do you have some, like, I mean, specifically for that stage, right? Like pre-seed seed is obviously like very, very early and of course a very fragile state, as we say in the startup world. Is there like any general advice how to plan or actually do these discussions with banks, right? Because I think from my own experience, and obviously I've seen a lot of these partnerships as well, like banks potentially take years for something to discuss and to make decisions. Not talking badly about banks, but that's just, of course, the nature, not just a financial institution, but large enterprises are, right? Where on the other hand, the founder, the team maybe has a couple of months runway left. That might be very, very important, right? So selling to enterprises is always a tough one, but like from your experience, is there some do's and don'ts maybe for founders when they're seeking, especially at that early stage, partnership with banks?
A good idea is to consider the size of your client. So banks are not every bank is similar to the next one. It's different if you try to sell to Goldman Sachs or to a Deutsche Bank compared to Volksbanken that have short decision cycles and are closer to trying out any solution. So starting off with small and mid-sized banks is a good way to prove your product and your value proposition. You build up a track record in the financial sector, and then you can go to those bigger players where, as you said, even an integration can take up 6 months to a year, and which is then also paid with a good setup fee, but still it doesn't align well with runway cycles. So finding smaller local branches of banks and selling to them is a good way to tap into this field.
And I guess it's a fair point for a lot of things in the financial world, right? We all sometimes in fintech like to talk about banks, but I think it's always important to know like banks is a term that caters. I mean, you mentioned about like Deutsche Bank, Goldman, and small Volksbank. There's obviously, I mean, N26 is a bank. There's so many more players in there with the status of a regulated bank, right? So I think it's important to understand that there are very, very different. And of course, that's, I guess, the task of the founder to understand who of these are potentially most interested in my solution, who are the ones most likely to move fast as well. And obviously, we all know you have to go step by step. So maybe even if there's a dream bank out there that needs to decide, maybe keep them in the process and the flow, but don't build your business that this thing will close very soon.
Yeah, definitely. And then, as I said before, banks can be such a great door opener to a wider network that comes with them. And when you consider your international expansion, if you win over a mid-sized bank in an interesting expansion market, then you can quickly tap into way more customers.
That makes sense. And then, like, especially like in your portfolio companies, we mentioned about a couple of companies already, like who are partnering with banks. Do you see? I mean, like the Banxware is a very, again, from the fintech side, but then I think Remind Me and Atlas Metrics is a little bit more like surprising ones for me for sure as well, that they partner with fintech startups. Like in your portfolio companies, do you see now also like a bigger interest for going that approach now? I mean, it might be also one of the reasons you wrote this article to kind of, because this might not be on the heads of the founders for outside of fintech, right? So do you see like a little bit of a change happening and founders understanding this approach better?
I would say yes. As most B2B software markets are quite competitive, this is often one where you face less competition because it takes a bit more preparation, planning. It's not so easy to go after them in the first place. So this is often an attractive customer group where you don't face that much competition, and also the internal solutions are often not that.
Well, you can argue, right? In a way, I mean, everything is tough in building a startup, but obviously, when you're not from the financial service world, you might not have so much understanding of the whole space. It makes it in a way for you and your competitors a bit tougher nut to crack. So obviously, if you are willing to sit down and do the hard work and understand what is required, what is necessary, and maybe speak to other companies who have done it before, who had a similar position as you as of today, maybe then if you can succeed with it, this might be in a way also, of course, a competitive advantage then, because this is hard to achieve and others might not be so easy able to copy it. And of course, for everything that happens in specifically in like fintech, once you have this, it might be the same as Atlas Metrics, right? Once there is one case that worked really well with a small bank, then maybe a larger bank, you do step by step, then your competitors basically have to follow behind you. So they cannot start with a big bank either. First, they also have to start with a smaller one and prove themselves. So of course, when you start early and you're the first one doing it, you might have the advantage of winning quite a big customer segment or quite a bit of partnership deal in that area. And then like looking from a perspective, actually getting to talk to banks, right? I mean, again, like for a fintech founder, somebody who has built or has worked in fintech before, has probably built up a decent network and maybe knows a couple of people how to reach out to. Maybe the rather early fintech founders who have not worked in fintech before, they don't have a network, or maybe even the non-financial brands who don't really have any touching points. I mean, there's obviously a way for startups to get in touch with banks. Some have a corporate venture capital, others have accelerator programs or other kind of efforts. Would you suggest startup going down that way and use that as, I mean, obviously there's multiple benefits and it might be good for other reasons as well, but here specifically focusing on the partnership approach, somebody who wants to partner to a bank, are those programs helpful in participating and potentially getting outside of the innovation and startup team from this bank and getting handed over to the actual event department?
I would say it depends. So in the end, founders have to do the hard work themselves. They have to build up their own network to the relevant people so as you can imagine, there are multiple stakeholders to win over in financial institutions. From the board level, which is maybe the highest relevance and the directest impact on the decision, to the teams that would use your service themselves, to maybe even an innovation team that is handling those corporations. So as a first, VCs and incubator programs can be helpful, but any founder has to be aware that to make it scalable, it's up to you, and you have to put in the work themselves. Nevertheless, as a first step, so I'm a little bit biased, we like our approach that we are an independent venture capital firm and can open doors through our LP network. There are a few other funds that follow a similar model or can provide something similar in Germany, namely, for example, HTGF is doing a good job in Europe.
Sure.
Illuminate Financial, which is backed by a few bigger financial service companies. Those are great funds to have on your cap table and can open some doors for you. With CVC programs and incubators, I would try to look at the track record, what are they offering me, and then not put all my hopes into that they're opening every door, but have a realistic view on what they can offer and if that is helpful.
And I guess that in a way it's also completely understandable that it's unrealistic that such programs can take in like a number of X startups into the programs, and then all of them will be floated around internally for every different departments, right? In a way, obviously these teams also exist to not just like sort out, but obviously also being the connecting piece here, right? And I guess it's true not just for selling to banks and financial services, to any kind of enterprises. We all know, I forgot what the right number is that's floating around, but I think it's like 7 to 8 contacts you need at an enterprise to actually being able to find the right person who's willing, right? Because in a way, again, like companies like Atlas Metrics and Remind Me, maybe they think they know exactly who's the right person, and maybe on paper that is the right person, but only when you maybe speak to more, you might understand, oh, there's a completely different department, a different team that actually has a major pain point, and my solution can actually help them. I mean, it can be maybe in the Atlas Metrics case, could be about like, I don't know, increasing revenue or other kind of like partnership with their own customers, which they want to achieve for whatever reason, right? So sometimes it's not so obvious. So just what I'm trying to say here is, I guess, like just relying on like one entry door. Oh, that person that I spoke to at this major bank said no to me. This means we have to cross it off our list and never talk to them again, is definitely wrong. First of all, is like who you're talking to. And then second, of course, is also the timing perspective, right? Like, what do they teach you in sales? A no is just a no for this offer at this point of time. That doesn't mean that anything of these variables can change in the future where you can try again. And I guess like having multiple people, multiple touching points with these institutions is really, really important, and continue finding them.
Yes, as you said it, there's so many ways into larger organizations. As you said it, it's only a no for a short period of time.
Exactly. So don't give up is here the mantra, even if you get a couple of no's. But I guess anybody who has fundraised before knows this mantra as well. Then coming to the last question, or like the last thing I had here on what I want to talk to you about is, we talk now a lot about like partnerships and the benefits of partnerships and why startups can potentially seek it and the reasonings behind it. But from your perspective, have you also seen some kind of like red flags? Because I mean, not to highlight anything, but I guess there were also partnerships that didn't really work out very well, right? And obviously, especially, I mean, for a partnership that has been publicly announced is not working out very well, is of course not really good for either side. But you can argue the bank has probably a little bit lesser to lose because they might just like not pushing it forward and doing other things. Whereas the startup, maybe has received a setup fee, might have been paid for the efforts, but obviously we all know it's not just like being paid for the effort. This is not a service business. This is a product business. So you need to move forward and have these success stories to be able to continue to grow, right? Is there something in your analysis that you have seen where you say like, okay, these are like red flags, or these are things that founders shouldn't agree to, shouldn't do when partner with banks at a specific point in time?
Yes, so I would avoid exclusivity. This is usually something we don't see exclusivity terms that often anymore, but still, if you come across something like this, try to avoid it. Then in rather internal perspective from the startups, something we've discussed today before, if the sales cycles are too long in comparison to your runway at the moment, try to think of how many resources you put into that sales cycle and process right now, because it can quickly become quite intense, especially if you sell to larger institutions, how much they're asking, what you need to adjust, how much a product personalization you need to do. If this goes beyond your resources that you can allocate for that time being, then it might not be the best moment in time to do that. And you should rather focus on other opportunities. And then a point that I think every founder is aware of: do I have to tweak my product too much? And does it become a then personalized solution for one big customer? I leave my scalable product approach just for a nice logo or a bigger contract for a short period of time. Then I think there's no general answer, but as a rule of thumb, then it might not be the ideal partnership.
And I think this one thing that stand out from what you said right now is like, it's really, really complex, right? And it's impossible to, because there are a lot of factors go into it. You say no exclusivity, but of course, maybe at very unique points in time, this also might make sense, right? So it's really hard to answer for everything. But I also tend to say, like, when you are, especially because we know these partnerships take quite a bit of time. And sometimes I also suggest, like, when you are in a very late stage of this partnership, why did you go back in time and think, like, would you have gone into this partnership if you knew all of this at the very beginning? Maybe if it's a no, it's not a strict no to end the partnership, but sometimes it's also about, like, okay, where's my North Star? Why did I start this company? Why did I start this partnership? And is it helping me to continue down the way, right? Sometimes, we all know, right? In this industry, you have to collect logos. You have to do sometimes a little bit left and right. But the question is, like, how much left and right is this? And maybe it's a little bit left and right, but it's still helping me to go forward maybe in a little different path to where I want to go. Then it makes sense. But if it's completely distracting from the North Star I wanted to go, then maybe it's at least important to rethink in the team and speak openly about it and see how everybody is feeling to go down that path, because it might be quite a big change to what has been planned initially.
100% agree.
Richard, thank you so much. Is there anything we forgot you use for the fintechs and non-financial brands out there who want to partner with banks that we should touch on?
I feel we try to cover it all, but I just can say anyone building in fintech and B2B software, thinking about partnering with financial institution, please reach out. We can have a chat, a coffee, and we can share more learnings about the journey of our portfolio companies and what we have seen over time.
Yeah, definitely impossible to cover everything in like a short podcast episode. But yeah, those things that we missed, where maybe a founder or a builder is still a bit of a gap to understand, reach out to Richard. Probably LinkedIn is a good way to do that, or... Yeah, where I ask. And find Richard Würl on LinkedIn, ping him, maybe refer to the podcast episode, and then keep the conversation going over there. So yeah, thank you, Richard, for joining, for having this chat around like the whole partnership. Extremely important in our industry, extremely valuable for both sides as well, I think we discussed. And yeah, thanks for sharing, and until next time.
Thank you, Lars.
Thanks for listening. As you might know, I always look for insightful embedded finance story, especially from non-financial brands. Do you know a company or person I should interview? Please let me know. Until next time.